Okay, hello you guys, welcome back to my channel, and I'm here with another awesome review. We're going to be reacting to a actual institutional trader, and his name is Trevor Neil. Hopefully if some of the language doesn't make sense to you, I can explain it to you a bit better, but without further ado, let's get into the video. So the first question is, how can I compete with big money? And I get this question a lot, actually. Like when you guys call me, you're like, okay, if it's manipulated, how can I make money? And well, this is how you make all the money. If you can spot the manipulation and you already know what they're doing, like you have an advantage over the bigger funds because you're small. You can get in and get out. Like the liquidity of you getting in and out is much more.
I think not. Just don't try and compete with the big money machines. So the funds, the hedge funds, the professional traders, the institutional traders. So what do I mean by that? For example, these people have got microsecond, low latency connectivity. They definitely.
So they basically have more knowledge than you what's going to happen. They already know before you do, so don't try to compete. Is what he's saying.
They know the news before you do, even though the news is released at some instant at 1:30. They actually know it before you do. They're already priced it in, they've already made their money and go. You can't compete with that. So just avoid trying to compete within the areas in which you've got no chance of doing better than them. There are areas where
you can't do
they actually have no advantage over you, and why not go for that, you know, where you're really on a level playing field with them.
Yeah, so it's important that we listen to the older people, you know, who's been in the business. Now, the second question is, where do I have more of a chance, right? He told you where you don't have more of a chance. Like, you can't, there's no competition. You just can't compete. We got to stay in our lane. So where do we have more of a chance? Let's see.
I think that the areas where you have no disadvantage is if you're trading exchange traded products, so the price is transparent in the security. If you trade with a daily chart, you see exactly the same high and low and close and volume as any institution, so it's nothing secret about it. And so
he said look at the daily chart. So when I preach look at the high time frames, it is for a reason, guys. Like, you want to be looking at the bodies of those candles too, because those wicks, like the bulk of the volume of the trading will be around the bodies, and then wicks happen, they're so from broker to broker, but you'll notice the body from broker to broker will be close in price range. So yeah,
you can see what he can see, and so if you operate in that longer time frame, for example, all his advantages have gone. Actually, you've got many advantages now that he hasn't got. You can learn to trade as possibly better than an institutional guy who hasn't got any time to learn. You can study, you can do that. You can also not trade. It's not an option for many of these people. They must trade, and you can see that it's not the right time.
Right, you can relax, but then that's not an option. Wow, I learned something new. I didn't know that was not an option for them. Actually, no, that's true. They have to have their position. They have to have a position.
I shouldn't be doing it. Also, being smaller than them has a lot of advantages too, because for them, being very large means that by the time they start buying things, they're starting to move the thing itself. Most likely, if you do buy things, you won't be moving the market at all, and so you can buy strength and breakouts and things like that. But an institution has to predict the breakout, which is a very risky thing to do, in order to start buying before the event itself.
Yeah, so basically they have to, like, they see a low point on the chart and they cause the quote-unquote breakout. But it's like, if you go through my strategy playlist that I have here on YouTube, it's ways to spot it. Now, should I worry about market manipulation? And honestly, y'all, the bank's not looking at us. The market, they're not looking at us. If you have anything less than 2 million, they're not looking at you. They don't care. They don't even see us, you guys. That's the funny part about this. They don't see. Nobody ran your stop. Your $200 stop. Nobody ran that. Now, it is some crappy brokers out here, but
I think not. First of all, what people think is manipulation of the markets, things like short squeezes and dark pools and things like that. They're not. They're just factors of the market. You know, it is things that happen. The market's going to backwardations and things like that. It's not manipulation. It's a short-term nearby shortage has caused that, and really does this affect and impact detrimentally to the retail investor? No, it doesn't. Usually it's the institutional investor that's on the wrong side of these things that makes them appear so bad. The manipulation of the price in the shorter term is again, I think is not possible really these days. There's too many eyes on it. It's the reputational risk for the institutions is too great. The fines are enormous. They will get caught.
You can't.
And so it just generally doesn't happen.
Yeah, you can't get around those CFTC. You can't get around them. Oh boy, I need to go through actually all of my videos and make sure I put disclaimers too, so they won't come after me.
You may get rogue traders, but internally, firms really are very conscious of that, and a bad apple can ruin a whole
bunch. Oh, bank. Excuse me. How can I become an algo? See, I told y'all. Some people argue with me like, oh, there's no algorithm. It's not an algorithm, Tori. The little men, they just sit in their desk and they punch numbers, blah, 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 blah. No, sweetie, there's an algorithm. We're in the 2000s, honey. Any Forbes interview that you watch with traders, any trader who's trading on the floor, they will tell you they switched from just manual trading. They have an algorithm. Everything happens in price is algorithmic. It's algorithmic. ICT's been preaching this for years. That's why I believe he's one of the best in the business. So many traders will tell you it's algorithmic, and if you can really sit down and see what they're doing in price, it's a formula, right? This is the only time math will ever come in handy for you. You really don't have to do math. You just have to see where did they buy, where did they sell, notate that in your chart, wait for price to come to you. Just wait. It's gonna feel new at first because you're probably used to Head and Shoulders and Engineered, buying when those like retail books told you to. So you have to kind of like reverse engineer, but we can do it. We got this.
This is really something that private traders can do. They can't be high frequency traders and low latency traders. The cost barriers are too great for them, but they can become systematic. Systematic just means rule based.
Yes.
And there are plenty of very good programs out there which start at free, and even very good ones like NT4 is a very popular one in the retail market. It's a very good program, and there are better ones which you pay more for, and it's a lot to do with the flexibility and the data and processing power of it. But all of these programs are very good. Now, what they allow you to do is to develop a method which you have tested and finessed and said, does this work, or it would work better if I did this, and if I changed the way I operated the stop like this, then eventually come to a conclusion that if I continue to operate in this way, I will in the long run make money if I do that, and this will give me the discipline to do it, take away all the emotion. That's just the correct thing to do. If you don't make money, it wasn't your fault, it was the fault of the program, that it wasn't correct, but it wasn't to do with you. And mostly people stop doing things or get worried and say, oh, it's always me, or so I can't do it.
You can't personalize it. Like shouldn't hold it to yourself. You have to acquit it to your system and the processing of tweaking your system. So it's not you. And even saying, instead of saying risk to reward, say purchase to reward. That'll help you get out of that mindset of personalizing everything to the dollar amount. Like, don't come in this business saying, I'm gonna make, yes, the end goal of course is to make money, but don't let that be your main focus at first. Like, just come in thinking like, I just want to have like the utmost accuracy. If you strive for accuracy and just seeing what the banks are doing, then you will be successful.
Right, or I've lost money 5 times, so I'm not going to take this next trade and skip the next one, and things like that. It will stop you doing all that kind of thing. So you've got the discipline, the confidence that comes with that, and I'm certain that is the right way to do it and something that's achievable for a retail person.
What tools would you recommend?
I think using technical analysis and systematic trading is something you can do.
Notice, technical analysis and systematic trading is what he recommended. Why? Because these news events have already been priced in, right? So remember when I tell you guys, we use news as volume filters only. Like we're not looking at those numbers. The numbers have actually already been priced in. The effects of those numbers are already on the chart, believe it or not. So technical analysis and a systematic approach, meaning you have to learn those candlesticks, sweetie. Sorry, but you gotta learn it. No way around it. Okay.
One can do, and you can do this as well as or better than any institution. So you're at no disadvantage unless you try and compete in the very short time frames. And
but you see what he just said. There's no disadvantages unless you try to compete in the very short time frames where everything's, like it's a machine that's running this. So it's an algorithm generating these things. You can't compete with that. You have to go with the flow of that, right? And these traders, remember, you know how I say you have to buy at the last down candle, and the reason I say that the last bearish candle, the institution, before they sponsored the move to go up from that green expansion, like let's say this is a bullish example, I'll probably put something in the chart right here. Let's say it's a bullish example, right? They bought within that down candle, and that's why you see price going up afterwards, right? There was buying within that candle and it printed afterwards. And why did they buy during down moves? It's because of the sheer volume of size of their order. They have to price it in, and once they've done pricing in their buys enough, that's when you see a market reversal. That's when you start to see those dojis form at the bottoms of certain areas, right? That's particularly why, and I'm not cherry picking. You guys can go back through my strategy video, and I actually have a strategy playlist linked below you can check out and hear me say this and why. They literally buy during that, and they sell during up moves. Like those little retracements that you see during up moves is because they have to price that in, because they can't just put their big fat order into the they just can't just place their big fat order in there and then it'll just be disadvantageous for them. The move will skyrocket. They won't get out at a good place. Like everybody would benefit except for them, basically. Like the broker would probably make money, we would make money, but they wouldn't, because they'd be at a disadvantage. Nobody would want to buy that high. Like it would run away from them, basically, is what I'm trying to say.
Difficult and strategic type of trading which they specialize in. You can't do it better than them, and you haven't got the money that they power.
They have a lot of money, guys.
No advantage over you if you trade
more than
in the markets, and you've got many. You can do it better than them. You've got time. You can study. You don't have to do it. You don't have the problems with size that they have, and that creates considerable problems for them. And so you can trade. You can take trades which they are passing over because they're not. It just can't be done for them. But it is a profitable trade for you. And the other thing, the second thing that I would suggest is, if you can, I would try and get somebody to help you. This is not an easy thing to do, particularly for a retail person, to find somebody who's willing to spend time, who's got experience and can coach you. Like any sportsman, they need a coach.
Even me, technically, I had a coach, right? Technically.
And correct them and study them and be brutal and but knows how to do it. But he's not the sportsman that you are. But he's there to help you and to watch, to criticize, and try and find somebody like that. Beware of all the charlatans there are, the sort of gurus, people who pretend they're that thing.
Yeah, the ones in the Ferrari.
But really, it comes with time and experience and background of people, and try and go for those kind of people. I do this kind of myself in the institutional area, because they have problems too. They have off-form traders that they want to see what's wrong with those traders and people that they're bringing through the system, and I've worked with those people too. But they are available at a retail level, not easy to find, not cheap, the good ones.
Yeah, so one of the people I say who he's like referring to, he says like they're not cheap, that these type of people who do know the algo are available, and I would say that's ICT, and it's like he's like one of the only ones. And I haven't come across any other traders like that, but we'll see. This has only been like my first year in this industry, so as my time goes on, I'm sure I'll meet others.
So inevitably you're requiring a lot of their time, valuable time, and they are experts, so don't expect them to do that for free.
How can I trade wholesale, not retail?
It's quite interesting that I think that in many occasions the wholesale market, the institutional market, is often trading against the retail market at the very same moment where one is buying, the other one is selling. Mm. For example, if you think about a support line, for example, you might think that, well, this support line may hold. Also, the institution may think this support line may hold. The support may be the day's low, the month's low, the pivot low, something like that. They're seeing the same thing as you.
The day's low, the month's low. So notating daily highs, months, and lows. We talked about this, guys. We talk about it all the time. That's where areas of liquidity are. Liquidity means how easy you can get in and out of your order. And what causes these areas to be easy is because people are placing orders there. So when you hear liquidity, just think a cluster of orders.
Now, how might you react to this? Well, you want some confidence. So you might see that the approach to the support line is weakening. So the candles are getting smaller and the bodies are getting smaller and the volume is lightening. And then you have a nice white candle, which gives you the feeling that we've reversed up and the close is now well off the opening. And so
what he's saying is like, let's say, basically the way you read the bodies of the candlesticks, like he's saying pay attention to the body. Like there's wicks, right? But the body is really telling you like the size of the decision that's being made at that moment. That's why I really love, the Japanese candlestick, like reading those candlesticks. And I'll also leave a link to candlestick Bible down below in the description box, so you know like what each candle means. And so that white candle that he's talking about, so let's say there's a bunch of like small body candle, and then there's a really decisive candle that really notates buying, and you are very confident about that reversal move. That's what he's saying now when he says white candle. So just imagine you're like, okay, you have your your bearish candle, smaller bearish candle, maybe like a doji, and then your white candle would be the like green candle that just really signifies like, oh, okay, this could be a true reversal right around a higher time frame level or something like that. So yeah, that's what he means.
It's turning, and you might, as a retail trader, say, if it follows through on the next candle, I'm going to buy and enter the market. I've got a very obvious place for a stop, which is below the low of the recent candles, right. and that's where I'll enter there. Now, what you don't realize is that the institutions, because of their size, they could never do that. They couldn't wait for that late stage. If they start buying at that point, they'll push the market away from them, and they won't have got enough size on board, enough position on board, and the market will already run away. So they've already had to have participated. So as the market comes and starts to look as though it's going to hold and not fail, they will be the buyer. Actually, they caused the white candle that you're now seeing as a trigger.
They push the market. So that's what I'm saying. We cannot compete with them. Okay? If you have anything less than 2 million in your account, and I hope that you wouldn't, that you're like going and putting that money in other assets, okay? You can't compete with these people. Like, you cannot compete with them. You can trade like them, you can trade with them, like they are the model standard. Like, you know how if you're religious, you strive your best to be in the perfect image of God. As a trader, you want to strive your perfect image to be is to strive to be like an institutional trader. And that's your only way to get crazy profitability. Like, don't try to fight it with indicators, guys. Don't try to fight it with your indicators. Don't argue me down about this. I'm telling you, the closer you get to trading like an institutional trader, the more profitable you will be. Trust me. Trust me. I've been stubborn. I've been stubborn before. I've been prideful before, you know. But I was humbled, and then I made a change, and for the better. So trust me, I've already made that mistake for you. Listen to the old guys. They're telling the truth.
And they've already started to buy. It's risky because they're buying early. They haven't got the confidence that you've got, but they have to participate earlier than you. And so they are buying, and they will possibly be selling, having already bought at the very moment that you are buying.
Yeah, so you see what he's saying? The institutional trader, they are pairing their exits with where retail traders would buy, right? So when I tell you to exit at old highs, like if you had already bought like below, like where I talk about buying in my trading strategy, then you're going to exit at old highs. But retail traders, they'll have their buy stops at old highs, right? So that's where you want to exit. You want to pair up your entries and exits that way.
And they are the wholesale participants, and you are the retailers. Use your advantages, and certainly don't be drawn into and seduced into areas where you are at clear disadvantage. And these areas are you haven't got size, you cannot trade faster than institutions, and so go where you've got an advantage over them, which is more in the intermediate term. Doing technical analysis, become systematic, and
yeah, and that's why I always try to find places where they are reaccumulating. Right? They're reaccumulating orders, like a place that they've once left. What confirms it for me, and like I see what they're doing, right? And with the institutional style of trading, I see what they're doing, so I know where they're going to go and reaccumulate orders. So that gives me that edge. So I can buy there in confidence, knowing that they're going to like place more orders there and take advantage of that same level that they've once bought or once sold at. Sorry, I keep saying like buy, bullish, but because like I've been trading like a very bullish index, then that's what I'm on right now.
Do all these things as well as they can do it. They may have sophisticated algorithms for short-term trading and high-frequency trading and machine learning algorithms, but they're all gravitating towards this shorter time frame. Just leave that alone. Let them have that, but go to an area where, you know, if there's a trend in the market which is driven by the demand of the security, the fundamentals of security, that's what's moving the price. They can't change that. It will be the same for you as it is for them, and you'll be able to see it as well as they can see it. Maybe you could even see it better because you're working under less pressure than they are, and you've got more time and you're doing it more slowly than they are. So go where you've got your own strengths and avoid the areas where you're at a clear disadvantage.
So is swing trading the sweet spot?
It is for me. I'm not saying swing trading is the sweet spot for me. I'm not saying it is for everybody. It's just sort of when I ended managing a big fund and went into a smaller fund, I then didn't have anybody telling me what to do. So I had the opportunity to go to do what I thought was best and what would be most profitable rather than suited the investors the best. And so I feel that I have no skill or ability to forecast 6 months or a year ahead. You know, it's a guess like it is for anybody, but most people don't admit it, but the reality is who knows where it's going to be that far ahead. The short term is very difficult to trade for different reasons. It's difficult, but also you've got the disadvantages of all this power that these institutions have got. But I would head for this area, which I would think is with a horizon of about a month for your holding period, something like that.
Yeah.
That's typically swing trading, you know, the trading the ups and downs in a long-term trend. And there you can do that just as well as any institutional trader. You're not at any disadvantage. The size is not a problem, and you've got the same tools as they've got, the same data as they have got. So go where you've got the same level playing.
Yeah, and he's saying this because if you're trying to go in there with these indicators and the baby pips retail strategy, like baby pips is good for basics, but if you're trying to go in there like with basics and compete with these guys who have the algorithm, who are creating these moves in price, it's not going to win. But if you have a systematic approach and you are exposed to institutional trading, you know what's going on in price and why it's going on and why the algorithm is acting the way it is, you have a leg up to be on those smaller time frames, or at least have an advantage to know like where price is going if you study long enough. But never compete, always follow what they're doing.
Field as you're playing the same level playing field as they are, and I think in some cases you'll be able to do it better than they can.
So I know if you're anything like me, you're probably wondering, who is this this elder gentleman? He is apparently, he is a technical an analyst. Trevor Neil, MSTA, MCSI, has been a trader for over 30 years, having become a commodities trader at Merrill Lynch in the mid-1970s before going on to work at LIFFE, giving technical analysis support to floor traders. Oh, so he gives analysis to the floor traders. A real institutional trader. In 2000, he became a head of technical analysis at Bloomberg. He was responsible for training and technical analysis software development. The algo. He's responsible for the algo development, basically, what you're hearing. He has served on the board of UK Society of Technical Analysis. Oh, that was so cute. As principal trainer for the technical analysis, and trained the top investment firms and funds throughout Europe. Wow, so just imagine this one person is responsible for an algo. This one person is responsible for the training of the top firms. This is not small money. Trevor also delivers the popular Friday technical analysis surgery on the Thomson Reuters WebEx, and is also a cryptocurrency and blockchain expert for Chartered Institute of Securities and Investments. Interesting. This is interesting, guys. So and this is what I do, like when I find somebody new, I learn something new about someone, I if I don't know what words mean, I'll research it. I'll try to reach out. That's how you learn, reaching out, networking. But yeah, this is super cool, very informative. I just love this part. He's responsible for training technical analysis and software development, and the part where they say he also delivers popular technical analysis Friday surgery on Thomson Reuters WebEx, and is also a crypto and blockchain expert. Now, I'm not into crypto and blockchain just yet. It's not being manipulated. It's not being traded by commercials yet. So little guys like me wouldn't bode well in that environment. I mean, you can trade it. It is tradable, but I need to see particular hallmarks of manipulation before I trade crypto. But we should definitely check out his Friday's technical analysis surgery on Thomson Reuters WebEx. That would be cool for all of us to go and do. So maybe after you watch this, maybe you'll watch my playlist and keep Trevor Neil in your file of people you listen to, just to get your mind in the mindset of away from retail trading and thinking like institutional traders. And I hope you all enjoyed this video. I'm so grateful. We are almost at 10,000, right? 10,000, like, I don't even want to call you guys subscribers. Like, we're almost at 10,000 traders in this community. We've built a community of 10,000 traders, guys. 10,000. I don't even know if I've been around 10,000 people. Well, maybe once at a concert, but what? Wow, 10,000, that's so many people. And I appreciate and love every single one of you guys. Like, y'all are so positive and you're always cheering me on. And YouTube it's just definitely made me feel like less lonely, especially during these times. Like, I live in Georgia, where we can't really go out because people don't really like covering up their face or anything. So YouTube has really helped me be that hobby to keep my mind, you know, going, and so I'm not just going just wild in the house. But yeah, I love and appreciate all of you guys. I'm gonna try to get to my Instagram DMs. I have like 99, literally 99 of them. I answered quite a few. I'm gonna check my email now to do some chart markups with some of my friends. But yeah, check the bio for my description for my strategy, and I'll also leave a few of Trever Neil's information down below too as well. And I'll talk to you guys later. Bye.